India has been a place known for its attraction towards gold as a tool for investment, inflation hedge, and its most sought after mode, that is, physical jewelry in households. If we go by the news, the recent surge in the gold prices is not happening as a result of its demand in physical form, but rather there has been a slump in demand for physical jewelry. Factually, what's causing the rally is the demand for gold in various alternative modes, such as gold bonds, gold ETF, digital gold, etc. All these modes enable investors to hold gold in a dematerialized form, or we can say paper form, which is far beyond from hassles which we might face in holding the physical gold. Name it as locker charges, making charges, purity issues, etc. Hello everyone, welcome to Formulating Finance. Please like, share and subscribe to my channel and press the bell icon for all the video updates. One way of investing in gold passively and enjoying the returns is sovereign gold bond, which was introduced by the Government of India in 2015. In our new video, we will be touching upon associated features of sovereign gold bonds and will take you through the following aspects. How do you go about buying gold bonds in India? Are there any specific sovereign gold bonds tax benefits? What are the unique benefits that are available to investors in these SGBs? Above all, is the interest and redemption proceeds on gold bonds taxable or tax-free? What is sovereign gold bond? Who is the issuer? Sovereign gold bonds are government securities denominated in grams of gold. They are issued as a part of public borrowing program of Government of India. The bond is issued by Reserve Bank of India on behalf of Government of India. They are substitutes for holding physical gold. Investors have to pay the issue price in cash and the bonds will be redeemed in cash on maturity. Value driver of bonds will be the price of physical gold and accordingly investment as well as redemption proceeds are governed by gold prices. Why should I buy SGB rather than physical gold? What are the benefits? The quantity of gold for which the investor pays is protected, since he receives the ongoing market price at the time of redemption or premature redemption. The SGB offers a superior alternative to holding gold in physical form. The risk and the cost of storage are eliminated. Investors are assured of the market value of gold at the time of maturity and periodic interest. SGB is free from the issues like making charges and purity in case of gold in jewelry form. One can hold SGB in form of DMAT holdings to ensure safety. Are there any risks in investing in SGBs? Yes, there may be a risk of capital loss if the market price of gold declines. Who is eligible to invest in SGB? Eligible investors include individuals, HUFs, trusts, universities, and charitable institutions. What are the tranches of SGB during 2021? There are 6 tranches in 2020 and this year's last tranche is from August 31 to September 4, 2020. Issuance date is September 8, 2020. How the recent 5th tranche, which was launched between 3rd and 7th August, performed in terms of subscription. There was a record subscription of Rs 3,387 crores worth of SGB, By volume, it is 6.35 tons of gold. Issue price per bond was Rs 5334. This is by far the highest in value and volume in any series since SGB was launched in 2015. The SGB subscription is in contrast to the slump in the demand of physical gold. Thus, SGB subscription highlights the investment done in gold through an alternative mode. Price of this tranche is Rs 5,117 only per gram of gold for offline mode. Through digital mode, price would be 50 rupees less, that is Rs 5,067 only per gram of gold. Interest rate is 2.5% of the issue price. If you want to apply, you have to fill the application form. The application form will be provided by the issuing banks, SHCL offices, designated post offices, or agents. It can also be downloaded from the RBI's website. Banks may also provide online application facility. Interest will be received twice a year. Calculation will be Rs 5117 into 2.5% for 6 months. Amount will stand at 63.96 rupees. What is the tenure of the bond? Though the tenure of the bond is 8 years, early encashment, redemption of the bond is allowed after 5th year from the date of issue on coupon payment dates. The bond will be tradable on exchanges if held in DMAT form. It can also be transferred to any other eligible investor. What will the investor get on redemption? On maturity, the gold bonds shall be redeemed in Indian rupees and the redemption price shall be based on simple average of closing price of gold of 999 purity of previous 3 business days from the date of repayment, published by the Indian Bullion and the Jewelers Association Limited. Both interest and redemption proceeds will be credited to the bank account furnished by the customer at the time of buying the bond. Can an investor get the bonds in DMAT form? The answer is yes. The bonds can be held in DMAT account. A specific request for the same must be made in the application form itself. What are the tax implications of investing in SGB? The interest component is entirely taxable with your current slab as income from other resources held. In terms of redemption or selling your bond, SGBs, when redeemed at the end of 8 years, that is at maturity, any capital gains will not be taxed. Hence, Government of India is promoting holding it till it matures. This is an exclusive benefit given to investors in contrast to holding gold in any other way. Earlier exit can be done only after 5-year duration, wherein you can either sell it through NSE BSE if you are holding SGB in your DMAT account, or in offline mode through approaching your bank. If you sell it before completing 3 years after the date of issuance, your gains will be subject to short-term capital gains. But if you sell after 3 years, your gain will be subject to long-term capital gain and you will benefit from the indexation concept.